judgment, it lays down as to what is the correct legal position. So it says this Supreme Court judgment in Ajit Jain very categorically laid down the legal proposition that a person who has been summoned cannot be asked to rake up his memory and give reply as per the expectation of the officer to meet his requirement. That answer in the deposition may be affirmative or negative. It cannot be exactly in the line which he is actually thinking to build up the case so as to suit the requirement of the officer. The court said that only requirement in the law is that the person who has been summoned, he should have made himself available on the date when the summon has been made for his personal appearance. So to that extent, if he makes an appearance and if he makes his deposition, he has to speak his mind. Now, if he makes some deposition which may not be true, then the law will take its own recourse, because in all these provisions pertaining to summon under section 70 of the GST Act, as well as the perimeteria provision in the other tax laws, specifically it is stated that these proceedings will be judicial proceedings under section 193 and 228 of the Indian Penal Code. So if there is any wrong deposition, there are recourse available in the law to penalize or to prosecute the person who has made a wrong deposition. So we have to keep these things in mind, because we as a consultant face number of issues at the time of summon. Now, very frequent situation arises that being a chartered accountant or an advocate, few of our clients are issued summon and the officer is not allowing personal presence. This is a very common query. Okay. Though the chartered accountant or the advocate, he cannot assist his client for the deposition, the manner in which he has to make a deposition. But at the same time, the courts have held, even the Supreme Court in the case of Vijay Sanjani has observed that if it is the requirement of the assessee who is making a deposition that his consultant should accompany at the time of summon hearing, the law does not restrict. He should be rather allowed, but there are some protocols have to be followed, like the consultant can sit at a visible distance so that he is not interfering in the summon proceedings. At least what is the reason? It gives some kind of respite. It gives a sense of comfort to the assessee who is making written deposition. Most of the time we see that the person who makes deposition, the officers there are instances, in fact, that they are being manhandled or some scare is being created. If you do not write the deposition in this way, the case is not going to close. So at least this kind of situation can be avoided. So these two judgments, I thought that this has a relevance. Already the courts have deliberated this particular provision, and this judgment has a applicability even today in the GST law also.
Sir, most of the cases, the officers are directing to as per their choice.
So in that case, now we have to very tactfully handle the situation. Now, you should make a deposition whatever you feel right. Okay, not under any stress that you are made to make a deposition that you have accepted that this much is the tax amount you are liable to pay. There are instances which I will go through in some other judgments which I have taken in the slides.
But sir, when we are not allowed to enter in the room.
No, in that case, you have to show these judgments. That is why I have taken in the slides. The Supreme Court has given this kind of relaxation that at least a consultant, if at all required, then you have to make a written request to the officer that my consultant will also be there. And we will follow those protocols that he will not participate in the deposition proceedings. He will be made to sit a little far away. So now, if you make a written request, I don't think that he will be able to straight away deny your request without any reasonable cause. Then he will be under onerous duty to deny as to what is the reason, what under what circumstances he is trying to seek a deposition that he is not allowing the consultant.
Sir, can that person borrow some time?
This definitely, it is not that someone, it is a everyday life experience we are already facing, that on a particular date you are not available. Okay, you can always seek a date by giving a reasonable cause that you are occupied in for such and such reason. And you, in that very same letter, you can mention that these are the preferable dates on which you can cause appearance, and you are very much willing to cooperate with the department so as to help them to carry out their investigation procedure. It is not your intention that you want to disrupt the investigation procedure, right?
But so suppose we appear, suppose that CFO has appeared and they are asking some tax related some query that CFO is not aware of.
Yes, I will cover that situation also. I think I think we are having some technical issues. The slides are not able to go further with the slide.
Update.
Okay. Because I can make my deliberation without seeing the screen. I have those judgment copies, but at least it with for the yes. I think so. This is a very classic case which one of you have just pointed out. Disconnected. This becomes slow actually. Yes. Yes. Sudhir Devraj, this is it's okay.
No, sharing
Sharing हो रहा है ना? It is showing on the screen. I think again our audience, it is okay, na?
नहीं स्क्रीन शेयरिंग नहीं होगा स्क्रीन शेयरिंग नहीं
हो रहा है
बोलिए हाँ देखा थे हाँ स्क्रीन शेयरिंग कर रहे थे हेलो बोल रही है डीडीपी को कर दीजिए ना होस्ट कर दीजिए ना एक बार को होस्ट हाँ अभी हो गया हाँ ठीक है चलिए थैंक यू चलिए थैंक यू
स्लाइड अप डाउन हो रहा है ना?
हाँ भी होगा अभी क्या करना है वो थोड़ा रूम में होने से ना इनएक्टिव हो जाता है तो ऐसा कर
ठीक So this is a judgment of Honorable Jharkhand High Court, Sudhir Devraj. Now, although this judgment was passed in 2012, this pertained to service tax matter. Now, in this case, what happened? the department was investigating with regard to the taxability under Service Tax, Finance Act 1994. There were two contracts which the assessee had executed, construction contract. So the contention of the department was that both the contracts have to be clubbed for the purpose of assessment of service tax. And it was the contention of the department that by not clubbing both the contracts, the assessable value on which the assessee has paid service tax was short paid. Now, this Sudhir Devraj, he is a managing director of TRF Limited. In this case, the summon was issued under the service tax provision, read with the Central Excise Act section 14, identically worded. When the summon was issued, the general manager taxation of the company appeared and made deposition. Whatever was the query, it was answered to the best of the ability of the person who appeared. Then the department further proceeded to issue a specific summon to the managing director of the company, and they want the physical appearance of the MD. In the meantime, several correspondence were exchanged. Now, the issue before the court was as to whether, first of all, the court can enter at the summon stage, whether a writ petition would lie at the summon stage so as to stop the department to further carry out the investigation by issuing the summon, number one. Number two, whether the officer has enormous power to issue summon to any person in the company. Generally, what we see, a big company like TRF Limited, there are different departments, like tax department would be handled by a GM, under whose authority the tax is being paid and the returns are being filed. A managing director may not be in a position to state as to how the service tax has been assessed and how the returns have been filed, what stand has been taken by the company to pay service tax, whether all the contracts which are connected with the service contract have been clubbed for the purpose of payment of service tax. Now, the court categorically laid down that power which has been given to the proper officer is enormous. That cannot be questioned. Even the officer of the rank of superintendent has enormous power to demand personal appearance in the summon proceedings of the director, or even a clerk of the company may be asked to make a deposition. This is one thing. But at the same time, there has to be a reasonability while exercising any of the provisions of the taxing statute. So the test of reasonability has to be ascertained in each and every facts of the case. Now, in this particular fact, when the tax head, the general manager has categorically, he has made a detailed deposition, there remains nothing further for seeking the personal appearance of an MD. So in this situation, the court said that, first of all, the department has to see as to who is the appropriate person to whom the summon can be issued. It is all the more important because if a person of the higher rank in a company, if he is summoned and if he is not making adequate response in the summon proceedings, the investigation is unnecessarily getting delayed. And that actually does not serve the purpose of the department, because after the issuance of summon, they will further proceed for issuance of show cause notice under the relevant provisions. So it doesn't help. So in this kind of cases where it was found that summon was issued to intimidate the person of a higher rank like a MD, this was really not warranted. So if you see, the court in this case has actually, the court has given the importance, it has dealt with the importance of the reasonability while exercising the summon proceedings under section 70, which is under the GST Act. Now, moreover, it is important that not necessarily that head of the department should be the first recourse. You would recall that even in the service tax, there are circulars issued by the department, as well as latest circular was issued in the master circular in 2017, that at every drop of hat, the summon proceeding should not be resorted. If any particular information is available by writing a simple letter, the department should not resort to the summon proceedings unless it is seen that assessee is willfully playing dilatory tactics by not actually responding timely or not submitting the desired information. In those cases, only the summon proceedings should be resorted, number one. Number two, if at all the summon notices have been issued, the company should be left to decide as to who is the appropriate person to whom the company wants to authorize so as to participate in the summon proceedings. So this was the case before the Jharkhand High Court. And one more important thing which the court actually decided in this issue, that the purpose of summon is not actually to interpret the terms of the contract which the assessee has entered, on which the assessee is liable to pay service tax. This actually is not the objective of summon proceedings. Summon is only a last resort when some information which the assessee is willfully not supplying, that department is not in a position to proceed for issuance of demand notice. Only in those cases, the summon provisions should be invoked. Now, this is section 70, which we discussed summon. Now, before that, there is a provision for power to arrest, section 169. Section 69 of the CGST Act, which has to be read with section 132 of the CGST Act. Because section 122 is a long list where the offences have been laid down, under which situation the offence will be said to have been committed. Now, one important question that arises, first I must say, as to under section 132, that the provision which is there as on date, the provision which stands as on date is that if under 3-4 situation where the assessee is said to have been falling, like he has supplied goods clandestinely, but he has not issued any tax invoice, thereby he has not made the payment of tax. This is situation 1. Situation 2 would be like, these are all there in the provision, sir. I will share this PPT. Now, second situation would be that invoices are being issued, paper invoices are being issued without supply of goods. Second situation. Third situation, by virtue of that tax invoice, the recipient of tax invoice avails the credit knowingly that there are no goods, underlying goods. The recipient knows very well that he has not received any goods. And therefore, when he is availing the credit, ITC credit, he is conscious of the fact that this is a wrong availment of credit. And fourth situation will be, like if he collects any amount of tax which remains unpaid for the specified period of 3 months without any reasonable cause, these are the situations which attract section 132, and more specifically when the quantum is exceeding 5 crores and above, there is a imprisonment, compulsory imprisonment with a fine which may extend to 5 years. Okay. So now this, for the purpose of invoking the section, the imprisonment section provision under section 132, section 69 gains significance, because 69 provisions of section 69 gives the power to the officers to enforce the arrest. And now, how arrest can be made? The provision specifically provides that the power which has been given under this section is in coterminous with the provisions which are laid down in CRPC, Code of Criminal Procedure. That procedure have to be adopted, and the officers of CGST would be said to have been given a police power in parity with the one which is there in the CRPC, read with the IPC, relevant sections of the IPC. Now, I have taken 3-4 judgments because in this limited time, I will discuss a very common issue which we are actually facing, whether this provision for arrest can be exercised even if it is found that there is an allegation, at least that I am falling under one of the provisions under section 132, that I have been alleged that I have supplied goods without invoice, or I have taken the credit without actually receiving the underlying goods and services. Whether merely on the basis of allegation, can I be arrested when the amount exceeds 5 crore? And most important is that when the amount exceeds 5 crore, it is a cognizable offense, which means it is not bailable. And the rest of the provisions which talks about those commissioning of an offense, this provision section 69 categorically says, read with section 132, that all other offense will be said to have been non-cognizable offense, thereby meaning that these are all bailable arrests which would actually follow consequent to those allegations, consequent to those arrests. So arrest when the amount exceeds 5 crore, or even in the case of bailable arrests, that gains significance as to whether merely on the allegation can the arrest be at all met. So these are some judgments, 3-4 judgments in my slides. In these cases, it has been time and again it has been held that unless there is a proper assessment of the tax which is liable to be paid by me, there is a proper assessment of the penalty, that yes, I have committed an offense and I am actually liable to penalty under the provisions of section 122, read with section 132, the arrest cannot be met. Now, in this case, make my trip, again, this pertains to the service tax regime, where what happened, I have 15 minutes time, I suppose. 10 minutes. 10 minutes. Okay. So, in this case, make my trip, a very detailed judgment. I will just briefly state what was the fact, because it will help to understand what was the fact and what was the ratio which is coming out of this judgment. Make my trip, in this case, along with other assessees like Go, IBBO, in this case, what happened? The department came out with an allegation that these assessees, they have collected service tax amount from the clients and they have not deposited with the treasury. This was the allegation. The fact was in this case that these assessees were regularly filing their returns. There was no lapse. So these were the facts. And the department straightaway invoked the provisions of arrest as it was appearing in the Service Tax Law 1994 Finance Act. The High Court came out with 3-4 findings, very categorical findings, that arrest should not be taken very casually. This power should be exercised with utmost circumspection and not casually, because arrest can only happen once it is proved with certainty that yes, this is the amount of tax payable. And how it is possible to know whether this tax is actually payable or not? The court dealt with the provisions of CRPC section 41 and section 41A, which talks about the manner under which the arrests have to be, the provisions relating to arrest have to be exercised. like section 41 under the CRPC gives the power, which is a power given to the police authorities to issue arrest, to arrest an SSC or any person without even issuing a warrant. There are certain parameters there where the police officers are satisfied that there is a complaint and he has found that yes, he has a reasonable belief that unless this person is arrested, there will be no proper investigation, because there are likelihood that the evidences would be tampered, and unless this person is arrested, they will not be able to carry on their investigation proceedings. This is section 41A. Section 40, this is section 41 in fact. The other section is 41A, which is a subsequent provision where the notice is issued before arresting a person as to where the notice will categorically state these are the reasons 1, 2, 3, 4, that there are reasons that the circumstances are so which warrants the arrest of such and such person. So you please make an appearance on such and such date and you clarify your stand. So unless those certainty are there, these are recorded, the arrest power should not be exercised. So in this case, make my trip, in this case, the court noted merely because it is the allegation that SSC has collected the amount of service tax, there are provisions under the service tax section 73A. Section 73 was the provision in the service tax statute when to issue a show cause notice when there is a fraud suppression, or in cases other than fraud suppression, to issue the notice when the tax has not been paid. But there was another provision 73A which covers those situations where the tax has been collected and which has not been deposited. And for that particular provision, there was no specified period that 5 years period will be restricted, will be that the officers will be under restriction to invoke this provision only 5 years. That was not the restriction. There are provisions in GST as well. The identical provisions are there. So the court noted that when the returns are being filed, when there are adequate provisions to issue a notice under section 73A, the arrest which was actually being exercised, the provisions which was being exercised, the officers was actually a very casual approach which was not warranted. Because now there is a very famous judgment which the Delhi High Court in Make My Trip noted, that DK Basu and others versus State of West Bengal, where the Supreme Court has considered Article 21 and Article 22, which gives the right to life with dignity and liberty. Those constitutional safeguards are there, where Supreme Court in that judgment said that when an arrest is being made, the procedure of issuance of arrest memo should be complied with. Many of the times we have come across with a situation that where assessee is being detained, he would be given an impression that you are under arrest, but the arrest memo will not be issued because the court in the DK Basu categorically laid down those safeguards that when a person is to be arrested, a memo has to be issued. 3-4 particulars have to be mentioned. Number one, that what is to whom this memo is being issued, what is the charge, what is the provision which the authorities want to invoke. These are things which have to be followed. And secondly, that there should be a categorically noting in the arrest memo that the charge has been explained to the person who has been arrested. Okay. And the person who has been arrested has given a nominate, he has given a name of a nominated person to whom the officer would be informing that such and such person is being arrested. And this has also been informed to the person, and this is also noted in the arrest memo. Most of the time we see that 10-12 hours the person is made to sit. Basically that is a detention without issuance of arrest memo. So these are the safeguards which we should be very particular when at all we face such kind of scenario for any of our clients, that the safeguards are being adequately carried out by the officers. So now this judgment of Make My Trip has been upheld.
Last 2 minutes.
Only 2 minutes. Okay, I will just summarize. Yes, sir.
Yeah.
I will take 5 minutes, sir. It has been upheld by Supreme Court. And why I have taken this judgment? This judgment is now also being followed in the GST provisions as well. Now, in a very latest judgment, it is not a judgment. In fact, I will say it was an observation of the Supreme Court in C. Pradeep and versus CGST, where it has been categorically observed by the Supreme Court that unless the determination of tax payable is met, unless the determination of penalty is being made under Section 132, the power to arrest should not be exercised under Section 69 of the CGST Act. This is a categorical observation in the considering the GST provision by the Supreme Court. So this is the petition number I have mentioned in my slide. So the whole conclusion is that unless there is a proper assessment, unless that how the assessment will be carried on. Under the GST Act, there are 2 provisions under which the notice should have been issued, like Section 73 and Section 74 in the GST Act. Section 73 covers of those situations where the tax paid, short paid, ITC wrongly availed, and so, refund wrongly availed. Those situations where there is no charge of fraud suppression. This is number 1. Number 2, Section 74 covering the cases of fraud and suppression. So by issuing the notice under these sections 73 and 74, once the order is issued under these provisions, only then there is a certainty. Yes, this much amount is the tax which the person concerned is liable to make the payment of the tax as well as the penalty. So what it culminates from these judgments, that these judgments have a applicability in the GST regime as well. Number 1, the power to arrest should not be exercised casually by the officers. Now, we have spoken about, we have dealt with this, under which situation the arrest should have been done or not done. Now, there is an exception which has been carved out, which the courts, Madras High Court as well as Punjab, Haryana, in both these High Courts judgments, the decision of Make My Trip has been relied in great detail, and categorically the High Court in both these cases have laid down there are exceptional circumstances under which the arrest power can be exercised, like if the person is found to have evaded huge amount of tax and that person is found to have no place of business. Now, you can just correlate what we are facing today. A person is issuing fake invoices, bogus invoices. If you examine the matter, you will find that in large chunk of the cases, those persons who are actually in this kind of practice, they actually do not have any fixed place of business. Okay, so in those cases, the law provides them power to exercise the power of arrest. Section 132 read with section 69. This is number one. Number two, the assessee or any person whom the notices have been issued, he is not cooperating with the department. Number two. Number three, he is a habitual offender. In the past, there has been circumstances where he has been found to be evading taxes, or he is not cooperating with the department, or that there is all likelihood of the person fleeing from the country. That is also one most important criteria which will enable the officer to exercise the provision of making arrest, or he is an originator of tax invoices. And there are evidences which are available in the file of the officers that these are the concrete evidences which shows that there is an involvement of fraud or evasion of tax, which warrants that the person should be arrested. In this kind of situation, the officers can take recourse to section 69 for the power to arrest. So I will conclude. My co-speaker Arpit Haldia will take over. Thank you.
So, thank you, Rajeev. I think we all will agree that in the limited time that you have got, you have taken the charter of a very difficult course. And I think all of us have been benefited because of it. So I would just take 1 minute for technical requirements. So where is it? Achha. Arpit, can you share your screen?
Okay, the sharing is disabled.
Take. भरत जी एक बार वो सी डॉक्टर अर्पित हल्दिया जी को कर दिए ना को होस्ट हाँ हाँ और मुझे भी कर दिए तो हाँ और अर्पित हल्दिया जी हाँ थैंक यू So before we go to Arpit Haldia ji, we are fortunate to have President DDPA with us. So I request her to maybe share about in 1 minute about the series that we are having.
I'll take 30 seconds. Thank you for a wonderful deliberation. अभी और बहुत कुछ सुनना चाह भी रहा आपसे, लेकिन टाइम कंस्टेंट है, तो some other time. We'll have a bigger session with Rajeev.
Yes, so that will be
my pleasure, sir. And welcome Dr. Arpit Haldia ji. And we had the opportunity to hear you before, and we are very eager to hear from you this very important topic, penalty and prosecution under GST. Thank you very much. Over to Arup.
So, CA Dr. Arpit Haldia ji is first a friend of mine. So I think that is one thing that I really enjoy. And the thing that I've learned from Arpit Haldia ji is how to go in detail in every presentation that we need to do. So he's a chartered accountant, he's a ICWA, he's done his GIL, he's a graduate in law, he's a company secretary, he's a DISA, and of course since he's writing CA Dr. Arpit Haldia ji, he's also done his PhD in a very interesting subject. So maybe I'll discuss about that on some other day. So apart from all the qualities that Arpit ji has, he is an excellent author. He's written a number of books, and apart from that, if you go to his website, I think he will be sharing his. Arpit ji can share the details of the website at the end of your presentation.
Yes.
Yeah, so that is there. Apart from that, he is also visiting faculty with nursing for CGST professionals. He is trained, I think, thousands and thousands of professionals and government officials also. So with this, and he was the secretary bar association of Jodhpur Bar. He was also management committee member of the Jodhpur branch, and he is a very active member of a faculty group also, which is a pan-India group. So with this brief, but I cannot cover all the things. Please do forgive me for that because time is limited. So over to you for deliberation on officer penalties in case.
Thank you, Ruti, for the wonderful introduction. Thank you, Rajeev ji, for sharing half of the session with me, and I would be taking the rest of the penalty part. And together we will try that all the participants are made acquainted with the topic which we have been given for today. So quickly coming on to the session, the topic which has been assigned to me, the offences and penalties in GST. Just a minute, Arupji.
Okay.
Am I audible?
Yeah.
Okay. The topic given to me for today is offences, penalties, and all of us are receiving the notices under section 122 and section 73 and 74. So today, when I am talking about section 122, one common thing which I have observed in all the notices, in most of the notices which we are receiving, that when we receive a notice, what we are going through in these notices are that why not a penalty under section 122? Why not a penalty under section 122 be imposed without and that notice does not provide for any quantification or any sort of nature of offense that has been committed. So when I receive a notice which provided why not a penalty under section 122 be imposed upon the assessee, what we do is we start to reply to the notice. We ourselves try to ascertain that what is the offense that the notice is trying to say to us. But instead, if we see, there are 21 offenses under section 122 subsection 1. There are 4 offenses which are provided under section 122 1A. There are at least 4 to 5 offenses differently provided under section 122 2 and 5 offenses being provided under section 122 3. So in all, if we see, there are about 35 offenses which have been provided under section 122, and it is incumbent upon the officer to clearly provide that what is the offense that I have committed, and I am only required to reply for that offense only. If I go through one of the cases which have been quoted, this is a judgment of Honorable Andhra Pradesh High Court, and it is about section 271 1C. And although I am not practicing in income tax, but this judgment was found to be very useful for us. So I quoted this because section 271 1C provides 2 types of offenses. One is furnishing of inaccurate particulars, or second is furnishing of incorrect particulars. Now, in this case, Honorable Andhra Pradesh High Court specifically said that the notice should clearly provide that whether the particulars were incorrectly furnished or the particulars were inaccurately furnished. And if the notice is not providing such classification and also not clearly quantifying the penalty, then the notice itself or levy of penalty is incorrect. So taking this judgment into GST, how I can interpret this judgment into GST, that whenever I am receiving a notice under section 122, the notice should clearly provide that what is the specific offense that has been committed by me. Secondly, what is the quantification of the penalty which has to be done and which has to be paid by me. Unless until the notice is clearly providing this, the notice itself is void, it itself is invalid, and I am in all my right to challenge the validity of notice itself. So this is the first part of my presentation. Now coming to the nature of offences and principles arising out of those offences for levy of penalty. See, there are, what I can say, there are 3 types of offences. One is a civil offence, second is a criminal offence, and third is a quasi-criminal offence. Why this classification is important? Because when I am speaking about a civil offence normally involves levy of penalty. And they are generally part of civil statutes, just like GST, wherein GST is a civil statute except for section 69(132), which provides for prosecution. A criminal statute is a statute, or a criminal offense is an offense wherein a personal liberty of the person is at stake because he is sought to be or bound to be arrested on the commission of the offense. A quasi-criminal offense is an offense wherein both arrest provision along with levy of fees or a penalty has been provided in the statute. So there are three types of offenses: civil offense, criminal offense, and a quasi-criminal offense. This is a general perception which we have, that for levy of penalty there has to be a mens rea. And the famous case which we always refer, that is Hindustan Steel versus State of Odisha, that it provided that there has to be a mens rea for levy of penalty. If we go through the historical development of that judgment, Honorable Apex Court, if I remember correctly, in the matter of SEBI, has clearly held that the judgment of Hindustan Steel versus State of Odisha is not applicable on civil offences. It is only applicable in case of a quasi-criminal offence. So in cases wherein penalty has been provided and it is in the nature of civil offence, that judgment of Hindustan Steel versus State of Odisha is not at all applicable. So given the constraint of the time, this detailed PPT would be shared with the participants. So now once we have come to a conclusion that barring section 69, read with section 132, GST is primarily a civil statute, which primarily provides for a civil offence. Now the question comes, how can a mens rea be incorporated into a civil offence or a civil statute? Because once a mens rea is incorporated into a civil statute, then intent to commit that offence has to be proved by the revenue. See, in case of a plain vanilla civil offence, the only thing which the revenue has to prove is that the offence has been committed. Whether it has been committed with an intent, whether it was committed voluntarily, whether it was committed unknowingly, it has little relevance. The only thing which needs to be proved is whether the offence was committed. But when a mens rea is incorporated into the civil offence, then in addition to the fact that whether or not the offence was committed, additional thing which is required to be proved is an intent to commit that offence. So now the question comes, when this GST itself is a civil statute and it primarily provides civil offences, how the mens rea is incorporated into those civil offences? Now, this is one judgment of Allahabad High Court which provides that when the statute uses the word voluntarily, intentionally, negligently, knowingly, fraudulently, dishonestly, rashly, omits, without lawful authority, etc., then it means that mens rea has been incorporated into the civil offence. And once these words are incorporated, then in addition to the fact that offence has been committed or not, the revenue, the burden to prove that the offence was committed with an intent or the offence was committed intentionally also falls on the revenue. And if they are not able to prove the intent to commit or the mens rea, then they have not completed they have not fulfilled the duty which has been casted upon them in the statute. So it becomes very important that when we are reading through a penal statute, the most important thing is how the statute has been worded. Whether it speaks about the intent of the mens rea, that means it has a criminal offense color, or it speaks clearly and only about commission of the offense, knowingly or unknowingly or without an intent is irrelevant. That means it has a color of a civil offense. And on a broader basis, what we can see is an example of section 73 and 74. What is section 73 and 74? The way they have been worded. That in case of a section 73, the only thing which the department has to prove is whether the tax has been short paid, not paid, ITC wrong, whether the ITC has been wrongly availed or wrongly utilized, or the refund has been erroneously granted. This is the only thing which is required to be proved in case of a section 73 matter. Whether the tax was paid with an intent to evade, whether the tax was paid, short paid, unknowingly, it is hardly of any relevance under section 7. So this is a case of a civil offense. But when we go through section 74, although the offenses are same, of a tax not paid or a short paid or a ITC wrongly availed or a ITC wrongly utilized or refund erroneously granted, the mens rea has been incorporated through the use of the words by way of a fraud or a willful misstatement or suppression of facts to evade tax. So when department is invoking section 74 against me, it becomes imperative upon them to not only to emphasize that whether the offenses were committed, the 5 offenses which are provided have been committed. In addition to that, it is equally important. Again, it is equally important upon them to prove that the offense was committed by way of a fraud or a willful misstatement or suppression of facts to evade tax. So when we go through the penal provisions, and as we would go through section 122, we would be discussing how the statute has been worded and how we have to ascertain and come out clearly with the intent with which the statute has been drafted. Now again, one more principle. One, we have already discussed that how mens rea can be incorporated into a civil statute. One more principle, theory of double jeopardy and same offense. Now we very commonly say that I cannot be subjected to a penalty twice for the same offense. Now this is nothing but theory of double jeopardy. And if I go through section 7513 of CGST Act, section 7513 of CGST Act clearly provides that if a penalty has been levied under section 73 or 74, no penalty for same offense can be levied under any other provision of the statute. So now the question comes, what is the scope of the term same offense? Now, all the decisions which have been referred by me, the crux, the principle which is coming out of those decisions is, when the same set of evidences are sufficient to prove 2 offenses, then they are same offenses. But if an additional set of evidence is required to prove the second offense, then it becomes a different offense. Then it cannot be said to be same offense. Although 95% of evidences are same for the 2 offenses, but an additional evidence is required to prove the second offense, then they become 2 different offenses. So now let's take an example that a person has taken an invoice without the receipt of the goods, and he enters that invoice in his books of accounts. Now, since he has entered that invoice in his books of accounts, it becomes a case of a falsification of books of accounts. It becomes a case of falsification of books of accounts. But it does not become a case of availment of ineligible credit. Because for availment of ITC, I have to prove that this invoice which was entered in the books of accounts, the ITC was then taken in 3B as well. And unless until it is proved that the ITC which was reflected in the invoice was also availed in 3B, it will not be a case of irregular availment of ITC. But once that ITC is also availed in GST 3B, These are two different offenses. One is falsification of books of accounts, and second is availment of ineligible ITC, because an additional evidence is required to prove the second offense, that the tax which was reflected in invoice was also taken in GST 3B also. See, it is not mandatory upon me that whatever invoice I entered in my books of account, the tax is also required to be claimed in my 3B. It is my prerogative whether or not I want to claim the ITC or not. So this is broadly about the term same offense, that when an additional evidence is required to prove the second set of offense. Now coming to section 122 and section 73-74, read with rule 142. See, if we go through section 122, there are 4 subsections. And the 4 subsections, section 122(1) is applicable on a taxable person. Section 122(1) capital A is applicable on any person. Section 122(2) is applicable on a registered person. And section 122(3) is applicable on any person. So the statute is very clear with regard to the applicability of these provisions. A person who is registered or liable to be registered can be subjected to a penalty under section 122(1). Any person, whether he is registered, liable to be registered, or not liable to be registered, can be subjected to penalty under section 122(1)(a). Any person who is registered can be subjected to penalty under section 122, and any person, whether he is registered, not liable to be registered, can be subjected to penalty under section 122. Why am I emphasizing on these words? Because section 122(1) capital A, why the need arose to insert this section? See, initially 122(1) capital A was not in the statute. But as the law developed and as the time passed by, the government came to know that the registrations are being taken in the name of some person, but the mastermind is someone else. Now the person in whose name the registration is being taken are coming from a very backward area, who are not sufficiently financially capable person. So even though if the demand is created against them or a penalty is imposed upon them, it will serve no purpose because the mastermind is someone else. Now, when they moved ahead and started to levy penalty under section 122(1), subsection 1, 122 subsection 1, the query which was raised through the mastermind was that I am not a taxable person, I am not a person who is registered, nor I am liable to be registered. There are some other persons who are registered or liable to be registered. You can raise demand against them. You cannot raise a demand against me. And that's where the need arose to insert section 122(1) capital A, and that's why it is worded through any person rather than any taxable or registered person. Section 75(13) we have already discussed. Now coming to section 74 and 122(2). Interestingly, if we go through these two provisions, section 74 and section 122(2), they are having same offenses: tax not paid, tax short paid, ITC wrongly availed, ITC wrongly utilized, or refund erroneously granted. Now the question comes, why these two sections have same offenses? And why section 75(13) then says that if penalty has been levied under section 74, no penalty for same offense can be levied under any other section. And if we go through the notices which we are receiving, we are very commonly receiving notices in wherein the penalty is sought to be levied under section 74, read with 122(2). So does section 74 requires support of section 122(2) for levy of penalty? Whether it needs the strength of section 122 to stand upon and levy penalty? In my opinion, section 74 is a complete code in itself and it does not require the support of 122.2. And if at all it is being done, it has to be made part of a written submission that the penal sections are incorrectly being invoked. Why I am saying so? Because if we go through section 74, the quantification of penalty says that a penalty equivalent to tax specified in the notice. That's it. If a penalty is levied under section 74, it is to be equivalent to the tax specified in the notice. But if you go through section 122.2, it says that liable to a penalty equal to 10,000 rupees of the tax due from such person, whichever is higher. So the quantification itself is different under section 74 and 122.2. So how can an action which has been initiated under section 74 can take solace or can take the benefit of section 122.2 for levy of penalty? Because the quantification in both these two sections are different. So now the question comes that if section 122.2 is not to be invoked along with section 74, so when it will be invoked? Because they are covering the same set of offences. Therein we have to refer section 127. And when section 120, we refer section 127, it clearly provides that when a penalty has not been levied under section 62, 63, 64 and some other sections, then the penalty can be levied under this section. So if penalty is not leviable under section 62, 63, 64 or the list of the section which also covers 129, 130, then the penalty would be levied under this section. So what can be a situation wherein section 122 on it itself can be invoked for levy of penalty? See, let's take an example of section 62. If I have not filed my return and I have received a notice under GST 3A, and then also I do not file a return and an order has been passed under section 62 and a period of 30 days are also expired after the issue of the assessment order. Now that order becomes a finality. For what reason that order has been issued? Because I have not filed my return. And since I have not filed my return, that means I have also not paid my taxes. But section 62 in itself does not provide for levy of penalty. So if an officer who has passed an order under section 62 intends to levy penalty for the tax not paid to the extent it has been raised in the notice, in the order under section 62, he can use section 122 because it specifically says of tax not paid. So this is one example wherein section 122.2 on it itself can be used without having, without referring to section 74. And this is also the intent of the statute. It is not that statute was not, the lawmakers were not aware that section 74 and 122 are covering same offences. They were well aware. But they were also aware that if section 62, which is a complete code of assessment in itself, and it does not require support of section 73, 74 for creation of demand. So in that case, wherein the section is a complete code in itself, and it does not require the support of section 73, 74, in that case, which section would be used for levy of penalty? The answer is section 120. So that's how I interpret section 74 and section 122.2, that even though they are covering same offences, but how differently they are applicable on different offences. Now coming to the next part, what is the last date for levy of penalty? Or what is the last date for initiation and completion of penalty proceedings under GST? When we say that section 122 does not require support of section 73, 74. So what is the assessment mechanism for section 122? It nowhere uses in the form, in the time, and in the manner as we described. It only speaks about what are the offenses and how the quantification is to be done. So when the section is not delegating the power to specify the manner, time and form, interestingly, Rule 142 provides for issuance of DRC-01 and all the allied forms for assessment and creation of penalty demand. So in my opinion, Section 164 comes to the rescue, wherein the power has been granted to the government to make rules for carrying out the provisions of the Act. And since the Act does not delegate the power, Section 164 will be used to take and assume the power. Similarly, wherein the famous judgment of Madras High Court in case of PR money for transitional credit, wherein even though Section 140 initially did not provided the power to provide time limit for filing of Tran 1, but by referring and taking the benefit of Section 164, the time limit provided under Rule 117 was upheld by Honorable Madras High Court. So similarly, if someone is going to challenge that where is the manner, where is the power being delegated, in my opinion, it is coming, the ultimate reply would be that it is coming from Section 164. But then also, if I go through Rule 142, it does not provide for any time limit. Section 122 in itself does not provide any time limit. Rule 142 also does not provide any time limit. And this is something which has been left open-ended in the statute, that what is the time limit for levy of penalty in the Section 122. So this is the basic discussion about Section 122. Now coming to Section 122 and the offences provided therein. I have categorized the offences under different heads for Section 122. The first is relating to invoice. Now, before moving on to these provisions, I would again like to go to the initial discussion we had regarding the incorporation of mens rea in a provision. So when I read Section 122, subsection 1, there are two parts to Section 122(1). One is the identification of offense, and second is quantification of the penalty. So whenever a penalty is sought to be imposed, there are two observations which have to be arrived at by the officer. One, what is the offense? And second, how much is the penalty? And mens rea can be incorporated either at the identification stage or at the quantification stage. And this is where we have to identify, because ultimately mens rea, if incorporated into the section, the onus is upon the department to prove it. So when I read through Section 122(1) clause 1, it says supply any goods or services or both without issue of any invoice, or issue an incorrect or false invoice with regard to any such supply. So an incorrect invoice or a false invoice. See how the section has been worded. Both these terms have been used along with each other, incorrect or false. Because when I use the term incorrect, it speaks about an innocent mistake. But when I use the term false, it speaks about an intentional mistake. So had only incorrect been used here and false not been used here, it would have covered only unintentional mistakes or an intentional mistake, even though there might not be a mens rea to commit that mistake. So both these offenses would have been covered under incorrect, but false has been mentioned to specifically show the intent of the lawmakers that they want to have the intent they want to include the offense which has been committed intentionally. So incorrect or false, both these terms have been used, so thereby mens rea has been incorporated at the identification along with unintentional mistakes also. Now, when we go to the quantification part, the quantification part says 10,000 rupees or an amount equal to tax evaded. Now, supposedly, department says to me that you have made an incorrect invoice. Fine. It is a case that I have committed the offense. And when they have specified the term incorrect, the department says that whether you have done it intentionally or unintentionally, it is irrelevant. So you have committed an offense and you have to pay a penalty. I say, okay, I have made an incorrect invoice. So now let's come to the quantification part. Department says that you have to pay an amount equivalent to tax evaded since you have made an incorrect invoice. Now, when they are saying that I have made an incorrect invoice and I have to pay an amount equivalent to tax evaded, the onus again shifts upon them to prove that by way of preparation of an incorrect invoice, I had an intent to evade the tax. Because the term evaded, which has been used in case of quantification, includes mens rea. And if they are not able to prove, then the maximum penalty for preparing an incorrect invoice is 10,000 only. So if I can correlate both these provisions of identification and quantification, if the department says that I have prepared an incorrect invoice, in my opinion, there is no intent to evade, and therefore the maximum penalty which can be levied is 10,000. If the department says that I have prepared a false invoice, then they have to prove that I had an intent to evade, and then the penalty of equivalent to tax evaded would be applicable. And as we have discussed initially for section 271(1)(c), if two terms have been used, incorrect or false, the first thing incumbent upon department is to clearly provide whether it is a case of incorrect invoice or it is a case of false invoice, and then also provide that whether I have to pay 10,000 rupees or an amount equivalent to tax evaded. So if they say that I have prepared an incorrect invoice, in my opinion, the maximum penalty can be 10,000. It can never be tax evaded, because when they are saying incorrect, they are presuming that there was no intent to evade. Similarly, when we come to section 122(1)(2), which provides issues an invoice or bill without supply of goods. So the first offense was supply of goods without issue of any invoice or issue of an incorrect or false invoice. The second is issue of invoice without supply of goods. Now in this case also, the quantification is 10,000 or amount equivalent to tax evaded. Now when I go through section 122(1) clause 2, again, at the time of identification of offense, there is no hint of mens rea. The only thing which is required to be proved is whether or not the offense was committed. Because it clearly says in a plain vanilla term, issue of any invoice without supply of goods. Whether or not with an intent to evade is not incorporated. So if the department says that you have issued an invoice and there was no corresponding supply, that means offense has been committed. But at the same time, when they would be going for quantification of penalty, at that time they would have to prove that whether the penalty is 10,000 rupees or equivalent to tax evaded. And if they say that we will be levying penalty equivalent to tax evaded, the onus again shifts upon them to prove that issue of invoice without supply of goods was with an intent to evade. For 122(1)(2), another quantification can be that ITC wrongly passed. Now, when we go through quantification part, there are many quantifications which have been given. First is 10,000 rupees. Then the clause B is an amount equivalent to tax evaded or tax not deducted under section 51, or short deducted or not, or deducted but not paid to the government, or tax not collected under section 52, or short collected or collected but not paid to the government. Or now this portion of tax not deducted under section 51, short deducted or deducted but not paid to the government pertains to offences under section 51. So this would not be applicable under section 122(1)(2). The second part, tax not collected under section 52 or short collected or collected but not paid, again pertains to TCS provision under section 52. And going further, ITC availed of or passed on or distributed irregularly, or the refund claimed fraudulently, whichever is higher. So in section 122(1)(2), there might be a case wherein the department can say that if you have issued an invoice without supply of goods with an intent to pass the ITC irregularly. And that's why an amount equivalent to tax for which the invoice has been issued would be leviable. A penalty equivalent to tax for which the invoice has been issued would be leviable upon you. Now, coming to section 122(1)(19), which again pertains to issue of invoice and says issues any invoice or document by using the registration number of another registered person. So if a person issues an invoice or document using registration number of another person, that is an offense falling under section 122 clause 19. Section 122 subsection 3 clause E. Now this provides for failure to issue invoice in accordance with the provisions of this act or rules made thereunder, or fails to account for an invoice in his books of accounts. Now in case of section 122 subsection 3 clause E, the maximum penalty is 25,000, but it comes with a rider that penalty may extend up to 25,000 rupees. And 122 subsection 3 clause E, in my opinion, would be invoked in cases wherein e-invoice was required to be issued, but e-invoice was not issued and manual invoices were issued. Because it says failure to issue invoice in accordance with the provisions of this act. So in case of a failure to issue invoice and issuance of a manual invoice, 122 subsection 3 clause E could be invoked by the department. Now coming to the penal provisions relating to input tax credit. Section 122(1)(7). It speaks about takes or utilizes ITC without actual receipt of goods or services of both, either fully or partially, in contravention of the provisions of this act or the rules made thereunder. Now this speaks about taking or utilizing ITC without actual receipt of goods in contraventions of the provision of this act. So in my opinion, if section 122(1)(7) is being invoked, it can only be invoked in cases only where section 74 has not been invoked. Because section 74 and section 122(1)(7) provides for same offences. Section 74 speaks about ITC wrongly availed or utilized, and section 122(1)(7) also speaks about same. So this is one case under section 122(1)(7), wherein section 74 is directly in perimetria to this offence. Section 122(1)(9), it speaks about distribution of irregular or section 122(1)(9) speaks about taking or distributing ITC in contravention of section 20 by an ISG. So if an ISG is distributing the credit irregularly, the offence would be falling under section 122(1)(9). Now coming to offences relating to payment of tax / TCS / TDS collected. Now, section 122(1) clause 3. This is a classic example of identification and quantification. That is identification of offense and quantification of penalty. Section 122(1) clause 3 says that a person who collects any amount of tax but fails to pay the same to the government beyond a period of 3 months from the date on which the such payment becomes due. So, supposedly I am filing a return. I am taking a case of April 2022. The return is due by say 20th of May 2022. So by the words of section 122(1) clause 3, the tax has to be paid by 19th of August 2022. But I failed to pay the tax by that date. Now what happens that the department comes in September 2022 and says that you have not filed your return. I file my return immediately without any notice being issued. Then after filing of my return, department serves me with a notice that since you have not paid the tax within 3 months of it becoming due, you are liable for a penalty under section 122(1) clause 3. I would say okay, because I have collected a tax but I have not paid to the government within a period of 3 months from the date it becomes due. But then again, what is the amount of penalty which is required to be paid by me? It is 10,000 rupees or an amount equivalent to tax evaded? In that case, the onus again shifts upon the department to prove that since the tax was not paid within a period of 3 months of it becoming due, there was an intent to evade, and that's why a penalty equivalent to tax being evaded would be levied. I would say that yes, merely I have not filed a return for a period of 3 months does not automatically mean that I had an intent to evade. I was going through some financial crisis. I had filed my GSTR1. I am carrying on the business. So where is the intent to evade? For maximum penalty that can be levied is only 10,000 rupees. So merely because I have not deposited tax for 3 months from the date it becomes due, it cannot be a case wherein a penalty can be levied equal to the tax amount, because the term evaded has been used there. And if the department is not able to prove the term evade, then the maximum penalty is 10,000 rupees. And keeping in mind that the subsequent words of tax not deducted or tax not collected, they are only pertaining to section 51, 52, because section 122(1) clause 4 and 5, section 122 clause 1, section 122 subsection 1, clause 5 and 6 are pertaining to section 51 and 52. So when I come into the next offense, section 122 clause 4, which says collects any tax in contravention of the provisions of this act, but fails to pay to the government beyond a period of 3 months. So what is the offense which is being committed? Supposedly the goods were exempted from levy of tax, but I still collected the tax. So it is a case of collection of tax in contravention of the provisions of the act. I am a composition dealer, but I still collect a tax. This is a case of collection of tax in contravention of provisions of the act. Again, identification and quantification has to be done separately. Section 122 clause 5 and 6, which speaks about payment of tax or payment of TCS or TDS. In case of a failure to deduct tax or a failure to collect tax or deduction or collection of an amount which is less than the amount required to be deducted or collected, or failure to pay to the government. These are the offenses under clause 5 and 6. Now, if we go through these offenses Interestingly, there is no intent of mens rea either in the identification stage or in the quantification stage. It clearly and only speaks about the manner in which that whether the default has been committed or not. And if it is proved that default has been committed, say the tax has not been deducted properly, the penalty equivalent to tax not deducted would be leviable, irrespective of the fact that whether it was an intentional mistake or a non-intentional mistake. Now coming to section 122(1) clause 8, which speaks about refund and says wherein a refund has been obtained fraudulently. Now if we go through this provision, the term fraudulently itself has been used at the identification stage. So then the fraudulently word, since it has been used, so the quantification time also the higher amount would be applicable, that is equivalent to the refund being sought if the refund is more than 10,000 rupees. Then coming onto the nature of offences for the records being maintained. Section 122 clause 10, which speaks about falsification of records. And it says that wherein the records have been falsified or substituted, or fake accounts have been produced, or documents have been produced, or any false information has been produced with an intent to evade payment of tax due under this Act, it would be an offence under GST Act. Now, if we go through this provision, what are the terms which have been used? Falsifies the records, or produce fake accounts, or documents, or furnishes any false information or return. For what? With an intent to evade payment of tax. And as we are discussing these provisions, it is pretty evident that the lawmakers were well aware of the fact that what are the specific terms they are using. See, it is pretty much impossible to discuss the penal provisions for the offences being committed, because each and every offence has a different nature, a different color. But what is more important is when the offence is before us, if we are able to relate it with the language being used in the statute, and whether the onus has been discharged by the officer, if that can be made, in my opinion, that would be the correct way of assessing the penalty. So when I am discussing these provisions, the emphasis by me is upon discussing the principles which has been incorporated in these provisions rather than the offense itself, because it is because we don't have the mind of the offenders, or we don't have the mind of the department that how they can fit a particular offense under a particular clause. Because the intent of the revenue is to fit all the offences in the provision just for the sake of levy of penalty. But at the time when we are preparing the reply, what we can say is the onus is upon us to correctly see that whether the provisions have been correctly invoked vis-a-vis the principles which are applicable, and if they are not, then make it a part of reply. Section 122(1)(16) speaks about failure to keep or maintain or retain books of accounts or other documents in accordance with the provisions of this Act or rules made thereunder. So yes, I have not maintained or kept or retained books of accounts. There is one case of Allahabad High Court wherein the books of accounts were not maintained at the principal place of business; they were maintained at some separate place. So in that case, the department sought to levy penalty of equivalent to the tax being evaded. Allahabad High Court said that yes, it might be a case that books of accounts are not being maintained at a proper place. So it can be an offence for levy of penalty of 10,000 unless until the department is able to prove that the books have been incorrectly maintained and certain transactions were not part of those books, and the intent was always to evade the tax. Section 122(1)(12), which says which is about registration, wherein furnishes any false information with regard to registration, but either at the time of applying for registration or subsequently. So if any false information, again the term false has been used. When they are using, there is a famous case in Central Sales Tax Act for a C form being produced by the assessee, wherein Section 10 of Central Sales Tax Act uses the term false. And Honorable Apex Court specifically said that since the term false has been used, that means an intentional mistake has to be proved by the department. Section 122(1)(13), preventing officer from discharge of duty. So obstruct or prevents any officer in discharge of his duties under this act. In my opinion, the best possible penalty in this case is 10,000 rupees, because even if an obstruction is made, it cannot be equivalent to the amount of tax evaded, because these two are completely different subjects. Now, next penalty relating to transportation of goods, relating to transports any taxable good without the cover documents as may be specified in this behalf. Now, this is one case of Section 122(1) Clause 14, which is being sought to be invoked in case of an expired e-way bill. There is a decision of Tripura High Court wherein the e-way bill was expired and the department made a case of Section 129, but in that case they said that the penalty which can be levied is only under Section 122(1)(14), that is transporting of any taxable without the cover of document as may specified. So although e-way bill was generated, but it was expired, so that is the only default which has been committed. Section 122(1)(15), which provides for suppression of turnover leading to evasion of tax under this act. Again, whether it is similar to Section 73-74, tax not paid or short paid, can it be said that an offense of tax not paid or short paid and suppression of turnover under Section 122(1) Clause 15 are separate offences or same offences? There is one case of Kerala High Court in service tax regime, which is part of my presentation also in case when we are discussing theory of double jeopardy, wherein Section 76 spoke about tax not paid. And Section 78 spoke about tax not paid due to undervaluation of services. So the matter reached before Kerala High Court, and therein it was argued that they were same offences. And Honorable Kerala High Court therein said that these are two different offences, because when 76 says about tax not paid, it can be for a reason of n number of cases. But when Section 78 speaks specifically about tax not paid in case of undervaluation of services, so therefore an additional evidence is required to be proved. However, from 1st of April 2008, a specific provision was inserted wherein it was said that either a penalty can be levied under Section 76 or 78, but it cannot be levied under both these two sections. Now coming to Section 122 Clause 17, fails to furnish information or documents called by for an officer in accordance with the provisions of this act or rules made thereunder, or furnishes false information or document during any proceedings under this act. So therein also, again, failure to furnish information or of furnishing of false information. Quantification again would be depending upon the scenario. But in most of the cases, in my opinion, it would be 10,000 unless until the false information can be linked to the tax amount being evaded. And in case of an ITC case, then it would not, it could also be equivalent to the ITC which was sought to be irregularly claimed by the registered person or by the registered person. Section 122 Clause 20 speaks about disposal or tampering of evidence, wherein a taxable person tampers or destroys with any material evidence or document, then in such case the offence would be tampering or destroying the evidence, and the quantification of penalty would have to be done appropriately. And Allahabad High Court judgment has been made part of my submission, wherein they have divided these offences into two parts, Part A and Part B. In one of the parts, they have said that a maximum penalty which can be levied is 10,000 rupees. Because the second clause is not at all applicable in such offences. And in the other set of offences, the penalty would be quantified on the basis of 10,000 rupees or amount equivalent to tax evaded or whatever quantification criteria given in second clause. Because in that case, both these two quantification criteria can be made applicable. Section 122(1) clause 21, wherein the assessee disposes of or tampers with any goods that have been detained, seized or attached under this act. So the person disposes of goods which have been detained, seized or attached, then in such case penalty would be leviable under section 120. Section 122 clause 18, which speaks about supplies, transport or stores any goods which he has reason to believe are liable to confiscation under this act. Now this is one penalty which is very regularly applied in case wherein additional goods are found at the business premises when physical verification of stock is done and it is compared with the stock in books of accounts. So supposedly my books of accounts has a stock of say 10 lakh rupees and physically there is a stock of 15 lakh rupees. So there is a additional stock of 5 lakh rupees. Can section 74 be applied in such case? No, because additional stock has been found. It is not a case of tax not paid or short paid. That stock is still lying in my premises. So in that case, section 35 subsection 6 would be invoked, wherein it says that if stock has been found which has not been accounted for as per the provisions of section 35(1), it would be a case of deemed supply of goods, and tax penalty would be arrived mutatis mutandis applying provisions of section 73-74. So a deemed supply would be there under section 35(6), and the provisions applicable under section 73-74 for the procedure to be followed would only be taken. It is not a case of determination of tax under section 73-74. It is only a case of section 35(6) being applied for treating a deemed supply and the procedure provided under 73-74 being used along with confiscation under section 130 and with levy of penalty under section 122(1)(18) for storing goods which are liable to confiscation under this act. So whenever an excess stock is found, it is a case of section 35 subsection 6. Read with mutatis mutandis procedure under section 73 or 74. Read with 130 for confiscation and read with 122(1) clause 18. 122(3)(b). Now it is applicable on any person and it says transporting, dealing of goods liable for confiscation. The maximum penalty which can be levied is up to 25,000 rupees. So if a person is falling under the criteria of a registered person or liable to be registered, 122 subsection 1 would be invoked. If a person is not registered nor neither liable to be registered, then 122(3)(b) would be invoked. 122(3)(c) receives or is concerned in any way or deals with supply of services which are in contravention of the provisions of this act. So any person who receives or is concerned with the supply of services which is in contravention of the provision of this act, penalty under section 122(3)(c) would be applicable. 122(3)(a) attempts or commit to abet any of the offences mentioned. Therein provisions of penalty under section 122(3)(a) would be applicable and the maximum penalty which can be levied is up to 25,000 rupees. 122(1) capital A, which was recently introduced as we have discussed, and it says any person who retains the benefit of a transaction covered under clause 1, 2, 7 or 9 of subsection 1 of section 122 and at whose instance such transaction is conducted would be charged or leviable with the penalty equivalent to the tax evaded or ITC credit availed of or passed on. Now there are two categories being covered here. the person who retains the benefit, and secondly, the person at whose instance the transaction is conducted. Now, interestingly, the word and has been used between the two. That any person who retains the benefit of a transaction covered under clauses 1, 2, 7 or 9 of subsection 1 of section 122 and at whose instance such transaction is conducted. So for a person to be covered under 122(1) capital A, whether both these conditions have to be satisfied, that the person should be the same person who has retained the benefit and who was the mastermind behind this transaction. Or if any of these two conditions is satisfied, then this provision would be applicable. Because there might be a case that A has retained the benefit and B was the mastermind behind the transaction. In my opinion, this and has to be read as or. And both these person A and B in the example I have discussed would be covered under 122 capital A, 1 capital A, because if a meaning is taken that single person should be there who has retained the benefit and at whose instance the transaction was conducted, then in my opinion, the purpose of this section would be defeated, because then the people would be committing the offense in such a manner that A would be committing the offense and B would be retaining the benefit. 122(3)(d), wherein a person fails to appear before the officer of a central tax when issued with a summons for appearance of giving evidence of produced document in an inquiry. Now, interestingly, this provision uses the term central tax, and the SGST statute would be using the term state tax. So, sir, if my jurisdictional officer is, say, a SGST officer, and he asked me to appear and I failed to appear, he can at best levy a penalty under SGST Act for 25,000 maximum. He cannot levy a penalty for under CGST, because CGST speaks about central tax officer. So this is one penalty wherein I feel that both CGST and SGST would not be concurrently applicable. Because if I am being asked to appear before a central tax officer, the provision of SGST are not applicable because they speaks about state tax officer. And if I am being asked to appear before state tax officer, the provision of CGST Act are not applicable because they are speaking about the central tax officer. Section 122(2)(a) and 2(b) we have already covered initially. And this is the judgment of Honorable Allahabad High Court which I was speaking. And these are column A and column B, wherein Honorable Allahabad High Court has said that thus from a plain reading, it is clear that penalty imposable for offences specified in column A above is 10,000 rupees or the amount of tax evaded, whereas for the offences specified in column B, the penalty can be 10,000 only, as in the said case there is no question of tax evasion. So whenever we are analyzing an offence, the first onus is upon the department to provide us the offence. Then we have to see whether they are falling under column A or column B, and whether at all both these criteria have to be seen, or only 10,000 criteria. 10,000 rupees criteria has to be seen. Section 123 is relating to failure to furnish information return, which is not at present applicable. Section 124, failure to furnish statistics, and interestingly, this 124 has lost its relevance because it is till now speaking about failure to furnish statistic, wherein section 151, which it covers, has been changed and it is now relating to it now relates to furnishing of information when sought after by the department. Section 125 speaks about general penalty for offences which are not anywhere covered, and section 126 is general discipline related to penalty. How I can summarize section 126 is that honorable courts in the jurisprudence which has developed over the period has said that whenever a discretion is given to an officer for levying a penalty, just like section 125, wherein it says that a penalty may extend up to 25,000 rupees. So that means the officer has been given a discretion to levy a penalty for 1 rupee or up to a maximum of 25,000. So whenever that discretion has been given, that means the mens rea has been incorporated indirectly. Because if the intent is there, then the maximum penalty would be applicable. If the intent is missing and it is a pure unintentional mistake, then a token penalty would also be sufficient. So when we are reading through a provision of a penalty, and we see that the provision states that, supposedly a provision states that where a registered person fails to do such and such act. Now, when the provision says that where a registered person fails to do such and such act, that means there is no mens rea in it. It is clearly a case of identification of an offense, whether the offense has been committed or not. And supposedly the offense has been committed. But the provision then further goes on to say that a maximum penalty which can be levied is up to 25,000 rupees. Then it means that if there is no intent to commit, a token penalty would be sufficient. And if there is an intent which can be identified or found out by the officer, maximum penalty can also be levied in such cases. And section 125 is nothing but an instance of such a case. And section 126 is nothing but which goes on and details out the principle which I have discussed, because it is nothing but based upon the jurisprudence which has developed. And even if section 126 would not have been there, barring apart the concept of minor breach, section 125 would have been understood just like it is being understood today, even if section 126 would not have been there, because it is nothing but the manner in which the jurisprudence which has developed over the period, be it in the pre-GST regime or in the GST regime. Section 127. Now, this is where, which I discussed earlier also, that it speaks where the proper officer is of the view that a person is liable to a penalty, and the same is not covered under any proceeding under section 62, 63, 64, 73, 74 or 129, 130. So penalty is leviable, but it is not covered. A penalty is not provided under all these sections. He may issue an order levying such penalty after giving a reasonable opportunity to be heard to such person. And section 128 gives the power to waive penalty or late fees or both. So this was all about the provisions of penalty, and looking to the paucity of time, I will not be covering the circular which was issued, but it is part of my presentation and can be gone through by the participant as and when the presentation is shared. And section 69(132) had already been taken by Rajeev Agarwal, so I will not be going to that, and handing over the session back to Arupji. And before handing over the session, would like to extend my thanks for giving me this opportunity, and all the participants for a patient hearing. Thank you very much. Would be happy to take the queries if any are, if there are any.
Hello. Hello.
Hello.
Sir, I have two questions.
Yes, sir.
One is as per section 122. Section,
Sir, your voice is not coming clear. Hello.
voice is clear.
Hello.
Hello.
Yes.
Yeah. It is clear.
Yes, it is clear now.
Okay. My question is regarding section. Regarding section 122, subsection 3, clause C, which speaks about issuing invoice which is not properly. So if we fail to issue invoice more than one in a financial year, then what is the provision of penalty? 25,000 for the all the.
Yes, I have got your question, sir. this is one thing which is yet to be decided, that if I do not issue
25,000 for the
yes, I have got your query, sir. I have got your query.
for single invoice.
Yes, this is one thing which is yet to be decided, because in some of the states, the interpretation is which is being taken is that each invoice is a separate offense. And in some states, the entire penalty is sought to be levied or treating it as a single instance. But if I go through and take a literal interpretation, then in such case, each e-invoice which has not been issued and a manual invoice has been issued, it is a separate offense. But since the section 125 uses, section 122(3) uses the term that a maximum penalty can be levied up to 25,000 rupees. So therefore, if it is not resulted in any loss of revenue and it was only an unintentional mistake initially being carried out as the provision was a new provision, in that case, the provision the penalty should be levied, treating it as a single instance, and as all the failures to be treated as a single instance. And if at all the officer is trying to invoke it as a separate offense, then we take we can take the benefit of section 126, read with section 122(3). Because discretion has been given to the officer for levy of penalty. Your voice, you need to unmute yourself.
Yeah, so Advocate Upadhyay, if you have any other query, maybe. So we'll take one query from our physical part. Yes.
अभी सर एक क्वेश्चन है कि 74 का सेक्शन जो है वो क्या जीएसटी ऑडिट के समय सिर्फ ऑफिसर जीएसटी ऑडिट जो है उसमें नोटिस जो आया उसमें वो कह रहे हैं कि these are the 4-5 discrepancies and if you are unable to reply on the discrepancy we revoke 74 and when we confronted the officer says कि ये 74 मैंने कंफर्म किया कि 74 में आप इशू कर रहे हैं नो फ्रॉड विद स्टेटमेंट 73 में आप इशू कर सकते हैं तो दे सेड कि 74 में ही इशू होगा 73 हम बुक नहीं करेंगे एंड दिस इज एज पर देयर सर्कुलर रिटर्न सर्कुलर व्हाटएवर दे है तो दिस इज माय क्वेश्चन टू बोथ ऑफ यू राजीव सर एंड अर्पित सर कि ये क्या 74 में ही इशू होगा या we can confront and write a letter कि मेरी आप 73 में दे जाइए प्रोसीडिंग को 74 इन्वोल्व मत कीजिए ऑडिट के so there is no willful misstatement or any of that sort.
This is a question on Shobha notice. I think you will take it up. Yes.
Arupji, the query was not clear initially.
Basically, when the audit, the GST audit is being held by the department. So suppose there is a discrepancy observation made by the department, can they compulsorily go to section 74 directly in all cases, or is it not a case to case basis?
Yes, see, this is one question which I really like, because department invariably invokes section 74 in such cases, stating that if we would not have come for audit, we would not have identified or taken out the mistake which you have committed. But we need to understand for section 74, what is the term which they use? It uses the term by way of fraud or willful misstatement or suppression of facts to evade tax. Now, three things are there. Either there should be a fraud or there should be a willful misstatement. When we are speaking about willful misstatement, the term intent to evade is by itself incorporated into it, that I intentionally stated an incorrect statement. And the third is regarding the suppression. Now, suppression has been defined under explanation 2 to section 74, wherein they said that a suppression would mean cases wherein a person fails to disclose or show information in the returns, records, or register documents maintained by them. So, if I have properly shown something in my return, and if the department is not agreeing to it, it is not a case of suppression, it is a case of interpretation, difference in interpretation. And the suppression is also then followed by to evade tax. Let's take an example. If GSTR 1 requires me to report the series of invoices, I do not report the series of invoices in my GSTR1. Yet it is a case of suppression because I was required to report the series of invoices in my GSTR1. But for invoking section 74, department is required to additionally prove that by not reporting those invoices, I have evaded the tax. And if I am able to prove that even though I have not reported the series of invoice, but the tax has been duly paid and can be checked from my books of accounts, it would not be falling under section 74 because it is not for evasion of tax. So merely stating that if we would not have come to audit, the discrepancy would not have been unearthed is not a correct way of invoking section 74. And yes, it can be challenged. And there are numerous decisions in pre-GST regime, wherein on the basis of this statement, invoking of extended time period has been struck down by the courts.
So Rajeev, I don't agree.
I fully agree with Arpit. Just to add on, what happens, the power has been given in section 75. Now, suppose assessee is of firm belief that there is no fraud suppression, he is contesting the charge. And what happens, the matter travels in appeal, and the appellate authority comes to a conclusion that yes, there is no case of fraud or suppression, deliberate fraud suppression with an intent to evade payment. So section 74 is not applicable. In that case, automatically it will get converted into section 73 by virtue of section 75 subsection 2. And it is now depending upon the luck of the assessee. If suppose the very notice was issued after the time period for section 73, then that proceedings will not further continue because by that time, this section is not going to help the department, because if 74 is not attracted, 73 comes into play, but 73 also, when the time limit has lapsed, then that enforcement of tax cannot be done by virtue of that notice.
Right, and as Arpit rightly said, classification, I have treated fertilizer to be 5%, whereas it should be 18%. So it's an interpretation issue. So how can that because this is an interesting. I personally have handled many such issues and have also secured so many judgments from Calcutta Tribunal. Now, this concept is not new. This concept that conversion of notice under section 74 to section 73, it started on 13th of May 2013 in the Central Excise and Service Tax Statute. Because initially when the notices were being issued, suppose the notices are being issued within the time frame of 1 year, under the provisions of 11A that there is a fraud suppression, the tribunal comes to the conclusion that no, there was no fraud suppression. Even if there is a time period available for normal period of limitation, that demand was being set aside because the very initiation of proceedings was wrong. So in order to plug those loopholes, a specific amendment was brought on 13th of May 2013. So, having dealt with those cases, those are very, very interesting. So, ultimately, what is the conclusion is that all depends upon the luck of the assessee.
And that D-Day for 1780 is coming near on 30th of September 2020.
Yes. After that period, if 73, that time period is over, then actually it will help assessee.
तो इसमें एक चीज है, डिपार्टमेंट हमेशा ये बोलता है कि यदि मैं इंक्वायरी नहीं करता, मैं ऑडिट नहीं करता, मैं आपके यहाँ आता नहीं, तो हमें कैसे पता चलता है? तो व्हाट इज द पर्पस ऑफ 73(5)(10)? यहाँ पे बोलते हैं कि वहां पर की एज अ सर्टेन बाय द एसएसटी या जो टैक्स पेयर और बाय द डिपार्टमेंट तो उसको कैसे पता चलेगा? वो इंक्वायरी नहीं करेगा, स्क्रूटनी नहीं करेगा, आपके यहाँ नहीं आएगा और ऑडिट नहीं करेगा, उसको पता कैसे चलेगा? तो 73(5) का मतलब क्या है?
Then it becomes OT also, exactly.
We need to understand is section 65 is for audit, and if we go through the definition of audit, it is only for examination and verification of records. It does not start with a prejudiced mindset that assessee has committed a mistake and we are trying to unearth the evasion.
Right. So this identical provision was there, service tax statute section 73 subsection 2A. Identical provision था कि अगर if I make a payment once it is being pointed out by the department or upon my own ascertainment, if I make the payment of tax, okay, in that case the proceeding has to end. No further penal proceeding should be initiated for invocation of like penalty and equivalent penalty. If I have paid out of my own ascertainment, or if it is upon the ascertainment by the audit, tribunals have held that if you say that had the audit not been carried on, then the very purpose of section 73, 3A, 2A of the service tax will stand odious. And if you see, there is a very nice judgment, very detailed order, decision of the SESTAT, which has dealt with this issue because the department has a habit of mentioning that had the audit not been initiated, the tax would have remained unearthed. The decision is Vandana Global Limited. It was passed 6 to 8 months back by SESTAT Delhi. 5 to 6 pages judgment on this very allegation on the repeated kind of copy paste in the show cause notices. That I will share with you, sir. That will help.
So, like the same thing.
Yeah, so with this, I think we'll have to come to a close of the Q&A. If you have any other questions, we can put it personally, so we'll share with the speakers. And the other,
regarding the detention of goods, where the officer retain the goods on the roads in transportation, they usually used the section 129 for penalty. But when I asked for what the section of the penalty, 129 is applicable for transportation of goods, for release the goods the penalty, payment of penalty. But they imposed penalty under section 129.
RPG will respond. Yes.
Arunji, the voice is echoing. Can you repeat the question for me?
Sir, when detention of goods on road or in contravention any point of view that documents are not related, then the officers use the power of 129 for penalty. But it is a not penalty section, it is payable section for detention of goods after paying penalty. That is the section 129 1B. But the equivalent of that is maximum penalty 122, that is the equivalent to tax.
So in essence,
amount of penalty of equivalent to goods, the 50% of the equivalent amount of goods. That is, if I challenge the section imposing the penalty, that is 129 is applicable the section 129 1B. What is the penalty section? That is it is not a penalty section.
Here, what sir is saying is actually whether 129 empowers the officer to levy penalty, on the goods which have been intercepted by him, and in considering that taxes have not been paid or there is evasion of tax because the document, there is some mistake in the document or e-bill or whatever, like documents are missing. So whether the officer has the power under section 129 to levy penalty.
Now, since the section has itself been changed, previously how section 129 was drafted was that equal to tax applicable. So where therein the cases were made that say I have sent the goods for job work, and since there is no tax applicable, therefore there is no penalty which can be levied under section 129. So in my opinion, to counter those judgments only, the section 129 has been modified, and now the penalty is applicable equal to the tax on those goods, not the tax applicable. So this is something which the query has been raised. I think it has been suitably resolved through the changing of section 129.
Because that is the ground that we are taking. Then why should I pay, as Arpit was saying, about double due party, which is not allowed by the Constitution also. So we were taking this ground Arpit ji कि हम कितने बार टैक्स देंगे सेम टैक्स को मैंने एक बार इनवॉइस के साथ दिया है फिर से आप मुझे टैक्स मांग रहे हो so now what they have gone ahead and done is they have said that you are not paying interest you are not paying tax you are paying penalty for
Equal to the
the
tax.
yes for the wrong that's what yes so that will be the last thing
In fact, what actually he's trying to make that where is the charge coming?
yes
Coming from section 129. Actually, I remember that there are some petitions which have been filed to challenge the very levy
under 129.
under 129. Whether at all, no, there are petitions like whether the virus 129 is being tested. It is actually pending before high courts. Whether at all it is to what extent this is constitutionally right. And if at all, if it is not struck down, the courts have to read down this provision, whether it can create a charge or not. Because see, once the vehicle is released upon payment, can it be said that this charge of penalty has arisen? That is what the point you are trying to make. So that luckily is still there.
That is one point which has been raised before Gujarat High Court, wherein cases are pending for section 120 and 130. Then the department, after invoking 129, has shifted to 130, and
That is
the
what-
saying that once you invoke 129.
130 also, sir.
No, in fact, there are cases where the department is sticking to section 129. Suppose if I take the release of the vehicle by paying, by submitting the bank guarantee or by making the payment of tax, does it mean that charge has been created of penalty? This is the question actually.
So that gets addressed by the High Court because now Calcutta High Court has fortunately ordered that
No,
NCA is important.
Actually, many orders have come. Now, this again goes against the theory of whether it is a civil kind of consequences, whether there is no element of mens rea required to be satisfied here. So there are judgments which are coming from
Calcutta High Court, what I have read till now, Calcutta High Court has shifted its. Previously, they were saying that no mens rea has to be seen. Now they have come to the judgment where they have completely altered their view that no mens rea has to be seen.
No, actually, the judgment probably you might be referring of Calcutta High Court is the single bench judgment of Jalpaiguri bench where the relief has not been given, where it has been held that there is no need to satisfy the element of mens rea. But of late you will find at least 10-12 judgments have come from division bench. Our Chief Justice bench.
Yes.
No, not Ashok Surkar. Progressive. Yeah, progressive and Usha Martin recently Ankit has handled. And progressive, which in my own case, where a very detailed judgment has been given that there is a necessity to prove that there was a mens rea.
But now they'll find SLP. So let's see what happens.
That time will
So yeah, I think we take the last question.
Actually, recently we have received one notice from the NCS department where they have said that your that accumulated credit is more than 50 lakh. So therefore, you have to submit all these documents, and that document is more than the GST audit. There is several documents they are asked, and that is for 20 to 23.
Okay.
Even books of accounts not yet audited. So how should I respond?
Though this is not from today's celebration because it's related basically to noise.
But in that case, you must raise a question. Now you have to first decide, you have to balance whether you will raise this question or not.
Yes. Under which provision they are asking for this?
Whether at all,
That's what.
whether at all they want to scrutinize, whether they want to audit, whether they want to scrutinize. So this section, because see, they have the habit of just shooting off the notice and seeking details. So those have to be tactfully handled.
Practically speaking, what Rajeev is saying is that it depends on the client.
Yes.
If his risk appetite is high, he can fight. You ask for the provision. If his risk appetite is not high,
If he is not responding by stating which section he is trying to invoke,
yes.
you can have all those options available to approach High Court in writ petition.
But can you defer till the audit has been done? Can you say that currently there is statutory auditing going?
Yes, that we can.
Now it all depends upon how good trading you are making with the department. That is the practical.
So with this keeping in mind, I think we have to get over by 6:10. Iske baad we'll get a message from the secretary saying that later. So I think with this, we will end the session today. But before we end the session, and because everybody will remain seated for 1 minute, so I would first of all like to thank Rajeev for taking us through the entire deliberation, the huge round of applause for this time on the interview and the way he said about LS. So, one of the judgments is being said that, in the Gujarat High Court, wherein it doesn't say what caution needs to be sent to the officer, whereas for the fact of present case, it is expected that it's already 5 years. An officer exercise restraint while dealing with search, inquiry, or issuance of summons and subsequent interrogation. So, what Rajeev was essentially sharing that, where the kind of power, whether arrest can be done without, quantifying the amount payable or not. So, we need to see, again, the risk appetite of the client, whether it allows or not. So, thanks Rajeev for the intense deliberation on that. And same with Dr. Arpit Haldia. He has taken us through the mundane part of penalty, which is a difficult part in a very interesting way.
Herculean task.
In a Herculean task, because whenever I have to take this particular thing, I kind of say, और कोई session मिलेगा क्या? Because it's really a challenge. But he's done it in a wonderful way. This week, हम लोग का Bengali में there is a word, there is a मुंह नहीं कहते कहते, but it just stuck to our heart, So it's like that. So thank you very much, Arpit ji. And I would really, express my deep gratitude on behalf of the entire BPA for giving your time for all the professionals here. And we'll also like, we'll have a huge round of applause for Arpit ji. So, and I would also like to thank all our online participants for having joined from different quarters of the country. This really shows that, the kind of knowledge enhancement that we all are seeking. Thank you very much. And as you all know, 15th will have a virtual session only because both the speakers are traveling. So on 15th, we'll have a virtual session on Zoom, and you'll get the link on the group itself just before the session. Thank you very much. Thank you, Arpit, once again.
Thank you, Ruchi. Thank you, Rajeev ji.
Arpit ji, please say one.
Yes.
आइए। We will now request our young and dynamic chartered accountant to hand over the moment to Rajeev.
Here you go.
Thank you so much.
Yeah, either we take it. So thank you, Rajeev. Thank you very much.
Thank you. Challenging.